what is the difference between profit and cash flow? So here's the main difference. First of all, the fact that we're saying what is the difference means it's not the same, right? I want people to understand that immediately. Profit and cash flow are two completely different things. Profit is a concept, right? Profit is not cash. Cash is real money, meaning cash is an asset. Cash is something in your bank account. Cash is something in your wallet. You don't see profit in your wallet. You know what you see in your wallet? You see cash. Because profit is an accounting concept generated to indicate a certain level of financial health. Profit does not equal cash because you can actually not have profit, as in make a loss, and still have money in the bank, right? The profit equation is sales minus expenses equals profit. So if the figure is positive, it's profit. If the figure is negative, it's a loss, right? So you could see how immediately the two don't equate, because that does not equate to monies in your bank account. The reason why it doesn't equate is that because profit is a concept, the profit equation is going to include things that the bank account does not. And one common example is things like expenses like depreciation, right? Or things like interest. These things don't necessarily appear in the bank account, right? So depreciation is a big example. Depreciation is an accounting concept that accounts for how you use your assets. So if I say income less expenses gives me profit, depreciation is not included in my bank account. So that's why I could still make a loss and have some money in the bank account, because profit is taking into consideration costs that don't have a cash impact. It's not reflected anywhere in the bank account. So I want people to understand that that's a critical thing to understand, because most business owners are using their bank account as a gauge to understand how the business is going. And while it is a good gauge to see how things are going, it's not the only gauge, and it's not a gauge to substitute for looking at profitability. It's two completely different things. And the other reason why the two never seem to be equal is because profit does not take into consideration when the money is actually paid to you, or when you actually pay something. So if today in the month of August, I have expenses, I've gotten invoices from suppliers that total $5,000, and I have issued invoices to my own customers of $15,000, my profit is going to say 15 less 5 equals a $10,000 profit. But here's the problem. I didn't get all that 15,000 from all that money in sales from my customers just yet. So my balance in my bank account does not reflect the profit equation, because I haven't gotten all the money. The timing of me getting the money is not the same as when I have to account for it in my profits.